Hello everybody, David Serpa here, and I'm going to give you the Reader's Digest version of the French Valley Market Update, or maybe even the Micro Machine Speed version of the French Valley Market Update. First off, if you're working with an agent currently, this is not a solicitation for business. I cannot advise you. These are my favorite people to study. You've got Nicholas Grilly with Riverside Consulting, ranked from bear to bull. Yes, Derek, you're my biggest bull. Travis Spencer with Real Estate Mindset. Jaspreet Singh with Minority Mindset. He has a free daily newsletter for you guys. And then Derek Evans with Smarter San Diego. It's important to get a lot of information. This was my last market update 4 months ago. Now we're going to go over a couple of things really quick. How do we get here? Where are we going? Why this is a managed crash? We're going to cover the top stories in just a few seconds. I'm going to tell you about French Valley, resale, new homes, rentals, payments, and then I'm going to show you my featured listing. Now, first off, how do we get here? We have the longest period in history without a recession. Now, we had 111 straight months ending in October of 2018, where we kept going up in prices and then it plateaued. We saw the largest increases to VA and FHA loan limits in history. We saw interest rates go near zero, driving everybody into the market. And then, of course, COVID-19 set off the third great migration, which was everybody looking to get the most out of their home, the most out of their land, and whatnot. And then we saw interest rates double and prices begin to plummet. So sellers are historically quick to raise their prices. Oh, the prices are coming up. I want to sell my house for $15,000 more than my neighbor. And they are slow to lower their prices during a market downturn. Hey, I know that house sold for significantly more 6 months ago, but the market has come down. My house is special. That being said, Riverside County is the second fastest growing county in the US. That means there's a ton of people moving here. It also means that inventory is coming in. It also means that we are set up for the market to come down here. Now, in the last year, these are where I gathered these articles from. So goodbye LA and San Francisco. Hello, Riverside and Central California. California's moving east. California's fleeing the coast, moving the Inland Empire. We saw home prices in inventory surge in Sacramento up north and in the Inland Empire down south. Everyone's moving from the LA to the Inland Empire. LA's high cost of living is driving everybody east. Now, Riverside, California, the metro, was the highest chance of seeing a housing market cool further if the US enters a recession. That's above Boise, Idaho. We are ranked right up there with LA County for the most foreclosure starts. That's 280 starts. Now, what does a foreclosure start? It just means that the process has started on the foreclosure process. And 26% of our loans were called risky loans. Now, where are we going? Just listen to the Fed chair, Jerome Powell, tell you where we are going. He's indicated it. He's done what he said he's going to do. They raised another quarter of a basis point. Unemployment is the lowest since 1969. So they are saying, nobody wants to work anymore. We want everybody to work, but then they're laying people off and buying up stocks. It doesn't make sense. The Fed stated that they're going to inflict pain. They have been doing that. And interest rates and mortgage rates are different, of course. So this is mortgage payments in 2020. This is the cost of mortgage payments in 2021. In 2022, we saw them skyrocket. And now in 2023, they're starting significantly higher. In fact, 29% higher than they were in 2021. Top stories. Now, I'm not going to go into all of these. You'd have to show up to the class for this, but iBuyer programs have failed. Predatory investors are buying up low-income housing, public housing, school housing. They've been buying up their own stocks, and these real estate corporations have been getting crazy. We saw Zillow's iBuyer program fail. We saw Open Doors iBuyer program fail. Nothing will beat the licensed local real estate professional. Now, this crash is by design. There's a lot of people saying we're not in a recession. Where is their bread buttered? Now, what is the long-term outlook? I went into this more in the class, but I can tell you that Michael Burry is saying sell. He's saying that this is the top of the market, and I can say nobody can predict the market, but we saw the top of it 6 months ago. Every metro is different, so when you look at a metro, you want to determine these things before determining how that metro will be affected. In French Valley, have a lot of people moved here? Yes. Are we seeing a lot of new homes being built? Yes. Have local wages kept up with pricing? Absolutely not. So your price to earnings ratio is off. Now in French Valley, I just want to concentrate on the Winchester side, Temecula schools, not Murrieta, Paris, or Menifee. And I want to concentrate on tract homes. These are homes that are built all in the neighborhood, right? So this is our area of interest that we're looking at for 6 months. We saw 6 months ago, close price 677. 5 months ago, 663. 4 months ago, 639. 3 months ago, 609. 2 months ago, 623, and last month, 603. So prices have come down significantly. In fact, they've come down by $73,930 in French Valley. That's a 10.9% drop, which would be the equivalent of about a 22% drop if this continues over the course of a 1-year period. You can see the way that that breaks down month over month, $12,321 a month, or $2,843 a week. I told everybody in my last video this was coming. 4 months ago, I said prices were coming down $2,886 a week at that point. Everybody looked at me like I was crazy, like the sky, like I was saying, the sky was falling. Now, active rentals, the rental market, 3,100 to 3,700, but you can see those are coming down. And I went over the 2-to-1 rate buy down. If you're interested in how that works, it basically means you bought down the rate by 2% the first year, 1% the second year, and then it goes up from there. I gave an example of the monthly payments for conventional, 20% down, FHA and VA, as well as what they would be in the first year, the second year, and every year thereafter. This information is based on our new listing. And if you want to get in touch with Derek, watch his YouTube content, watch him on Facebook. He is a wealth of information. New homes, we've got 7 homes sitting, 7 homes that will be available by Lennar, 9 homes, 3 homes, all in French Valley. In KB, there's sitting inventory. Meritage, you got sitting inventory. In fact, look at this, 38 quick move-in homes available through Meritage. And then you've got Pulte, which also has some quick move-ins available. Now, 75% of people move because they have to. This is where I will be this weekend, 11 to 2 on Saturday. We've already got multiple offers on this house. It was listed yesterday, but I'll tell you what, it's priced right, it's marketed right. They did a beautiful job with their home, and so because of that, they can expect to see top dollar. So my name is David Serpa. I appreciate you watching. My cell phone number is right there, 951-691-7798. This has been your Micro Machine Market Update on French Valley.